Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the massive rally that has taken place over the weekend. As you know, Bitcoin recently dropped all the way down to $103,500, and over the weekend, Bitcoin has rallied up to $111. Today, we're going to be breaking down what has happened, whether this is bullish or bearish. Is Bitcoin about to have a blow-off top up to $130, $40, $50, $60, $70, $80,000 by the end of the year? Or is this a dead cat bounce, and the market makers are just trying to get you into long so you can get liquidated? We're going to look at that today, and we're going to make sure that you walk away from this video with a firm understanding of where Bitcoin is right now, what it's doing, and how to prepare your trades and your investments moving into the rest of this year so that you can profit in the cryptocurrency markets. So, without much further ado, let's go ahead and dive right on into it. Bitcoin has seen a very bullish weekend, but that's a bit of what concerns me. Whenever Bitcoin goes into a major rally over the weekend, typically that's something that you want to be cautious about for two major reasons. Number one, the Wall Street and the major institutions are typically not at their desks. They're typically not there. There's typically significantly less volume on the Bitcoin and cryptocurrency markets on the weekend than there is during the week. Think about it like this. Think about if you just said 2/3 of Congress couldn't be there and we have a vote. Well, the bill might pass. But on Monday, when the other 2/3 of Congress comes and then they get asked, what do you think? The bill might fail. And so when half the market isn't in the market, of course, Bitcoin might be bullish. The only people that are there on the weekend are the Bitcoin OGs, the bulls, the people that firmly believe in Bitcoin. Of course, they're buying down below 110,000. Of course, Bitcoin is going to rally on the weekend because you have long-term believers in Bitcoin. However, when the market opens, as it just has just a few minutes ago, and you see, you see CME futures open, and you see the ETFs go online, and you see people trading, what are they going to think? Are they going to think, oh, man, I was thinking Bitcoin's going to go down to 94. It's up to 110. Great, I can open my short higher. So what we have is we have two different tranches of investors. We have the weekend investors. These are typically the diehards, the value-based investors, the people that are watching and seeing that gold is up at over $4,000 an ounce. This is a great investment. This is a great buy, so I'm going to buy here. However, when the week opens, you have the traders. You have the people that are trading the ETF back and forth. You have the people that are leverage trading, more likely to be on, on the market. And they can tend to be more bearish because they're looking at the short term. So in a sense, the first lesson I want to give you here today, weekend price action generally, in my opinion, reflects the sentiment of value-based investors. In other words, the intrinsic value of Bitcoin is here, the price is here. Therefore, if it's anywhere below the intrinsic value, most people like myself see the intrinsic value of Bitcoin well north of $250,000, they're going to be buying. In other words, in this case, the weekend is typically going to be more bullish than perhaps the week. As the week opens, you're looking at more of the price action kind of people, the people that are looking at the technical analysis, the people that are watching these videos. Have you ever noticed our technical analysis videos go out on weekdays, right? Most people that are looking at TA and short-term price are doing that during the week. And when they see, once again, all of the medium-term bearish factors, they may end up being more so bearish. So that's the first reason that you have to be a little bit cautious about weekend price action. But the second reason is because when Bitcoin rallies on the weekend, you create a freaking CME futures gap. The entire point of Bitcoin dropping down to $110,000 was to fill the last CME futures gap because we started that bounce on, you guessed it, a weekend. I'm so tired of these stupid CME futures gaps. I really wish this was not something that we had to analyze because it's really freaking annoying that Bitcoin has to go through crashes just to fill a gap. It's ridiculous, and I wish that it wasn't something that I had to bring to you every single day, every single week, every single month when we're looking at this. But unfortunately, this is something that the market takes very seriously. So we have to take it very seriously because we get our marching orders from Bitcoin. Now, I do want to talk about the bullish side of this bounce too, because it is too early to call it a dead cat bounce. The good news here is that Bitcoin has broken above two critical downtrends of resistance. And this is very important for two reasons. Number one, if you are in a short trade, this is your exit. If you're in a long trade, this might be an entrance. We'll talk about whether or not it is in a minute. But first, let's go over what happened. Bitcoin dropped on Friday at about 9 a.m. down here to $103,500. There is an enormous amount of liquidity, as we are discovering, down here around $103,500, which could cast some doubt on our prediction of a $94,000 to $100,000 Bitcoin. It is possible that 103, what we just saw, was the bottom. It's very possible. It might be that there are so many buy orders at and around 100,000 that it has basically become an impenetrable barrier. That is a theory that we're going to have to address if Bitcoin continues to rally here. The other good news If Bitcoin did bottom at 103, it's possible that Bitcoin is in the process of forming an inverse head and shoulders pattern that looks a little bit something like this. And if we did, then that inverse head and shoulders pattern would be pointing, give or take, towards all-time high. As you can see, this is kind of just a rough estimate, but this is basically looking at $126,000. So that's a good thing. But the other thing that we want to consider is that Bitcoin was stuck under this trend line right here. We were just getting hammered by this trend line. Every single time we tested it, Bitcoin would just crash and crash and crash. But finally, and over the weekend, I started noticing, look at this, Bitcoin's just trading sideways. There's no liquidity. Bitcoin has nothing going on. It's trading perfectly sideways. And what Bitcoin did was so beautiful. It just traded straight sideways in this tiny little, like 0.5% tall trading channel, straight through the downtrend of resistance. We broke above it right here on this candle body at 2300 hours on Saturday night. And then Bitcoin ended up having a small correction over the course of the next 5 hours. We bottomed on Sunday at 5 a.m. and bounced. That meant that we broke through this downtrend simply by trading through it. And Bitcoin ended up testing it as support, and that ended up helping Bitcoin to go into this rally. So that was a great long entry. If you caught that long entry based on those technicals, I'm so happy for you. Now, the second thing that we're testing is this downtrend right here. And Bitcoin, as we speak, is above this downtrend. My concern is the Fibonacci's. If you look at the Fibonacci retracement on our first leg of this correction, you will see that Bitcoin stopped out at the 0.382 Fibonacci here above $116,000. Well, if you adjust the Fibonacci to account for our new bottom down at 103.5, the 0.382 actually moves to 112. And wouldn't you have it, that's exactly where Bitcoin is testing right now, the 0.382. Bitcoin was not able to break above the 0.382 last time. Can Bitcoin break above the 0.382 this time? So for me, I have not entered into a long yet. And the reason for that is that although this probably would have been a pretty good entry, and we probably could have taken that if I had seen it, this was our Sabbath, so I was not looking at my trading desk, or I probably would have taken a long right here. At this point, with what I have in front of me, I'm looking to see Bitcoin break this 0.382 because it failed last time, and if it does manage to this time, then that gives a point to the favor of the bull. So think about it like this. You've got an army that's trying to invade a city, and this city has 3 walls. It's got a small wall, medium wall, high wall. You know, back in the day, you would have cities, and they would have city walls, and then they'd have moats, and they'd have another wall, and then they'd have a moat, and they'd have another wall, and so an army that is besieging this castle or this city, for example, take the siege of Vienna, for example, by the Ottomans. You know, you have the invaders trying to take these walls, and one time they don't take anything. They don't get through any of the walls. Well, the next time, maybe they get through one wall, but not the last 2. Well, they're getting better at invading this castle. Do you understand what I'm saying? And so you have to say, okay, that invading army either got stronger or the defending army got weaker. But there is a change. The first time we didn't get through a single wall. The second time we got through one of them. Well, next time is the invading army going to get through all of them? That's really the question that you have to ask. And so what I'm saying is that the last time Bitcoin tried to break through the 0.382, it categorically failed. It rejected here on a double top, had 14-hour red candlesticks in a row, something like that, 12, 13, 14 in a row, and then went lower. And it actually broke below the 0 level on the Fibonacci and set a new lower low. Like, it could not have been a worse rejection. I mean, it was a complete rout. This time, Bitcoin is testing the exact same wall, 0.382. Because of what we've seen in the past, we kind of have to expect that Bitcoin's going to do the same thing and be happy if it doesn't. If Bitcoin does manage to break through 0.382, then that's where I start getting bullish. So even though Bitcoin has broken above these 2 downtrends, the downtrends are actually not what's most important. What's most important is the Fibonacci. So for me, I am looking right now, I was looking for Bitcoin to get above 116 because that was the 0.382 with our previous Fibonacci. Now I'm looking for Bitcoin to get through 112 because 112 is the 0.382 on our current Fibonacci. And if you extrapolate backwards, 112 was the all-time high that was set on the 22nd of May, 2025 during the conference. So Bitcoin really needs to break through that market structure. We really need to do a couple of things. We need to bounce off of this downtrend, and then we need to bounce and rally through 112. That's when I would start getting more confident in Bitcoin and its current price action. So I am hopeful. I do believe that there's a great possibility that Bitcoin is about to go into a major rally, but I want to see more because at the end of the day, Bitcoin is having a correction on the macro timeline for a few reasons that are much more significant than what we're seeing on the short-term technicals. Number 1, gold is blasting off. We're going to talk about gold here in just a second. We can't ignore it. Number 2, You have fears as it relates to currency, and you would think to yourself, because you're like me, oh, well, if people are worried about the dollar, then wouldn't they buy Bitcoin? Not exactly. When people are worried about the dollar, they buy gold, because Bitcoin is still considered to be a risk-on asset. It is not yet considered a risk-off asset by the masses. I consider it a risk-off asset. I consider it that when I buy Bitcoin, I'm shorting the dollar, which is like the best trade you could ever possibly make. That said, the vast majority of people consider investing in Bitcoin to be far more risky than the stock market or gold. We know that's not true, but that's what the masses think. And so right now, when people are freaked out about interest rates, inflation, unemployment, all of this, they're not going to Bitcoin right now. That is significantly more powerful of a force than these short-term bounces that we're looking at. We have to keep things in order. We've got to keep first things first. The short-term technical analysis is subservient to the medium and long-term technical analysis and fundamental analysis. And right now, the sentiment is freaking terrified, and Wall Street is a little bit scared to buy Bitcoin because they're all aping into gold right now. So I'm excited about the bottom that we put in on Bitcoin at 103. I am not yet convinced that it's going to hold, but if it does, I'm happy because I got entries down there. I told you guys, I'm not waiting until 100. I'm not waiting to see, oh man, well, if I was right, then I'll be right. No, if I'm wrong and Bitcoin bottomed at 103.5, hallelujah. I got entries down there. I bought at 106 the other day on Friday. I love buying Bitcoin on a discount. I don't wait for it to hit my target. I ladder in. As Bitcoin goes lower, we have limit orders. And as Bitcoin goes lower, they get triggered. Boom, 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 boom. It doesn't need to hit my target. Okay, so I just want you to keep that in mind. If you're thinking, oh, Jab, you screwed me over. I put my entry in. No, ladder in. Get some entries as we go lower. You understand what I mean? Put a limit order every $1,000 as you go lower. 104, 103, 102, 101, 100, 99, 98, 95, 93, etc. Put a $500 buy limit order on each one of those. You don't even notice it. It triggers itself. If Bitcoin flash crashes, you get the entries. Okay, that's how you do this. That's why you have to have a cash account so that you have the ability to catch these lower wicks as they come. Now, let's talk a little bit about the longer-term fundamentals. Let's talk about gold. Let's talk about the market sentiment because we're in a bit of an echo chamber here. We're in a bit of a bubble in the crypto space. We just think, oh man, Bitcoin's going to $1 million. It's a foregone conclusion. I think that's great. The rest of the world doesn't think like that. They think that Bitcoin is this random tech stock that is having, at this point, trouble keeping up with gold. So what should we analyze from the rest of the world? What can we analyze so we can synthesize? My job as an analyst, it's a bit of a side note, but I think this will help you. My job as an analyst is to do two things, is to analyze and synthesize. Analysis is breaking apart, and synthesis is bringing together. It's my job to split apart all of the information and then bring it together into a theorem that you can carry with you that's hopefully useful. So let's continue to analyze what's going on in the market, and then before the end of this video, we will synthesize this into some marching orders for you. So the analysis that we need to do on gold here is thus. Gold has had the largest correction that it has seen in a very long time. We saw a 4.4% correction in 13 hours. That's like Bitcoin levels of rapidity and speed and velocity with which it's moving. That said, gold has seen a very sharp recovery from there. We entered into this ascending triangle pattern, which was on a downtrend, and gold broke bullish here. Gold, therefore, is having a very good day, and gold is probably not done with the rally. I don't know where gold's going to top out. It would be foolish to try and call the top on gold because we just don't know. Right now, the RSI is at 93. We've only ever really seen RSI go above 93 one time, and after that, we did see, back here in 1973, we did see a correction on gold for approximately 3 to 4 months. Right? So I do think, and this is the one prediction that I am comfortable making, sometime within the next 3 to 6 months, gold will correct for 3 to 6 months. So sometime between now and like February of next year, you're going to see a correction on gold that will last between 3 and 6 months. But I can't tell you where the top is. I can't tell you if we topped at 43.80, if we're going to go to 5,000. At this point, we're already so high, it's really hard to tell. But what I can tell you is that at some point, gold will take a break. It has to. It has to take a break. And it's not going to take a break for long. The fiat system that we are operating as in a country and as a world is dying. It's in its death throes. So gold is going to continue on a vertical line up for many years. All right. It's going to rally up to $10,000 an ounce by the end of the decade. You can bet on it. I would bet on it. If gold drops more than 15% off of all-time high, I will bet on it by buying some. I'm not saying that the gold bull market is over anytime soon, because I don't think it is. This is characteristic of what you see at the end of a civilization. When Rome collapsed, the value of gold skyrocketed. When Venezuela collapsed, the value of gold against the Venezuelan bolivar, whatever the currency was, skyrocketed. Zimbabwe, Weimar Germany. You name it. When a currency collapses, gold skyrockets, and generally the gold starts skyrocketing before the currency completely collapses. Right? Last month on September the 18th, when we saw the FOMC drop. The Fed through the FOMC drop interest rates by 25 basis points, you saw the 10-year Treasury yield go up. That's not what's supposed to happen. You're supposed to see the 10-year Treasury yield go down. Instead, it went up, and that's because no matter what the Fed does, people are sick and tired of the government debt, and they're freaked out about it. And they're having a flight to hard assets right now, which is gold. That's what our family's doing. I want to be very clear. Like, I'm not buying stocks. I'm not. I'm buying Bitcoin. If I get a good entry on gold, I'll buy some gold. I'll buy some gold coinage, right? Currency, not the bullion. People are having a flight to hard assets because they do not trust anything that touches the fiat system. It's become very apparent since COVID that it is something that is toxic, it is infiltrated, and people cannot trust the institutions anymore. And so that's why they're buying gold. So the bull market is not going to stop anytime soon, but it will take a break as people start to take profits. And when they do, then Bitcoin is going to end up seeing a major influx because the value spread between Bitcoin's fair market value, which in my opinion would be determined by the market capitalization of gold, and the current market capitalization of Bitcoin is enormous. You even see this on XAU over BTC. If you look at XAU over BTC, oh, we got that backwards. I always get that backwards. BTC over XAU, excuse me. If you look at BTC over XAU, Bitcoin over gold, you can see Bitcoin is in a bear market against gold right now. But that's not going to last. That's not going to continue forever. And in fact, this is a great thing because this means that Bitcoin is in a generational buying zone. Make no mistake. Don't say, oh my gosh, Jeb, Bitcoin didn't go down to 94 to 100. You're an idiot. Like, no. 107 is a once-in-a-generation buying opportunity for Bitcoin. 110 is a once-in-a-generation buying opportunity for Bitcoin. Anything below this uptrend right here on Bitcoin over gold, this is the value of Bitcoin versus the value of gold. Anything below this uptrend right here is a generational epic investment opportunity for Bitcoin because when Bitcoin springboards back, as it always has, it's going to go vertical. And you're going to see the price of Bitcoin running up to 100 instead of 25. You're going to see the price of Bitcoin probably 4x against gold over the next 5 years. And so while Bitcoin is performing while the gold is performing very well right now, you're moving into an era that's going to be very good for Bitcoin. I'm going to run through a couple of reasons why that is. Number one, the Fed has signaled that quantitative tightening is coming to an end. Whenever the Fed ends QT, it almost always is because they're about to start QE. They've stopped QE and not started QT, but it's very rare that they stop QT and don't start QE. And I can prove that. If you go to the USC BBS, United States Central Bank balance sheet, I will show you every single time that the Fed has stopped quantitative tightening, and then I'll show you exactly when they started quantitative easing. They're the same line. They're literally the same line. Every time the Fed has ever ended QT, every time this line has ever stopped going down, it has immediately started going back up. This is the balance sheet at the Fed. Stops going down, goes back up. The longest that it moves sideways is for a couple of months. QT concludes, QE comes. Do you understand what I'm saying? It makes no sense whatsoever if QT is about to conclude, quantitative tightening, the rolling off of treasuries and mortgage-backed securities from the Federal Reserve's balance sheet. It makes no sense that you would not see QE start. It actually makes a lot of sense that you would see QE start when you consider what Jerome Powell has been saying from the podium, that they're very concerned about jobs. They're very concerned about the labor market. Typically, when the Fed is concerned about the labor market, as we saw during COVID, what do? They introduce liquidity, which is a fancy term for they print money. They print money by buying treasuries and mortgage-backed securities with money that they don't have, especially considering the treasury market is getting far more expensive. Interest rates are very high on treasuries. Great time for the Fed to buy some treasuries, right? So doesn't it make sense that quantitative easing is coming? Yes, it does. We at this point already we're in the process of pricing in 100 basis points of rate cuts from the Fed. When you see QE and you see rate cuts coming from the Fed, you're going to see the market move from being risk avoidant, buying gold, to, oh my gosh, I have so much money I don't know what to do with. I'm going to buy the stock market, and the stock market is going to artificially moonshot. And when that happens, Bitcoin's going to trade like a penny tech stock, and it's going to moonshot too. Next year is going to be an extremely bullish year for Bitcoin, in my opinion. 4-year halving cycle says that next year Bitcoin's supposed to be going down 70%. That's not going to happen. Highly improbable that that's going to happen, especially when you consider the fact that part of the reason Donald Trump got elected was because he had the crypto vote, which is a thing now. Do you really think that he'll get the congressmen and women in the seats that he wants them in if we have a bear market that, according to the 4-year halving cycle, should be bottoming on November 10th of next year, within a week of when the midterms happen? No, they're not going to let that happen. No, they're not going to watch Bitcoin be at $40,000 when the midterms happen, knowing full well that this industry is one of the reasons that they're in office. By the way, they've also made $1 billion off of it in the last year. They don't want to see Bitcoin go down to $40,000. They're not going to do that. It's not going to happen. It's not going to happen. If it does happen, it's because they're trying to fund a strategic Bitcoin reserve, and they're not going to do that around the midterms. They would do that in like Q1 of this year. They're not going to do that. So you have the rotation out of gold. You have the Fed's quantitative easing that's coming. You have the FOMC is going to be dropping interest rates. We already know this. All of these things are going to lead to a massive inflow of liquidity. The last time that we saw a massive inflow of liquidity from quantitative easing, while we had strain on the labor market, was during the 2020 COVID pandemic. And I think you might remember what happened to Bitcoin under those quantitative easing, low interest rate conditions. Oh, that's right. Bitcoin 16x'd in a year. Now, I'm not saying that Bitcoin is going to 16x again next year. I'm not saying Bitcoin is going to be at $1.5 million a coin next year. What I am saying is that when gold is adding the entire market capitalization of Bitcoin in a week, and that's being driven by the overall market being risk off, when you see the Fed shift the market away from being risk off because of high interest rates and quantitative tightening, and they shift it to quantitative easing and lower interest rates, then the entire market goes to risk on. And what is the most attractive risk on investment in the entire world right now? Bitcoin. If the mic wasn't attached, I'd drop it, because that's all the analysis you need to know where Bitcoin is going in 2026. That's all you need to understand why the 4-year halving cycle is dead. And I'm going to share with you exactly what you ought to do about it. Disposable income, dollar cost averaging to Bitcoin. It's really that simple. We've got a lot of analysis here. What gives? All this tells us that the world is going in a direction that is very unstable. The world understands that we're moving in a direction where you cannot trust banks, you cannot trust the Fed, you cannot trust the government. In a world like that, you have to separate money from state. And millions of people every single year are waking up to the fact that Bitcoin does just that. And it is the best solution to that problem that humanity has ever discovered. Investment in Bitcoin and an education in Bitcoin is one of the most important things that you will do this decade as it comes to wealth generation. And it's also very important that you have the right tools. So I want to take a minute before we wrap out our analysis and synthesis here to let you know that we have actually brought on an exchange as a sponsor, another one. We have a non-KYC exchange, 2-bit, but we've got a KYC exchange that we're bringing on, and we brought them on for one very specific reason. Their name is Femex. You've probably heard of them. Femex is an incredible exchange. When you sign up, you're going to get a bunch of bonuses. I'll go over those in a minute. But what I actually really want to do is I want to come over to Grok and I want to explain to you exactly why you should use Femex. I just asked Grok a very simple question. How did Femex perform during the crash on 10/10? Because that's all it comes down to. If you're going to use an exchange, you want to know that you can trust it when crap hits the fan. This is Grok's synthesis, analysis of Femex versus comparison. Uptime and outages. During the 10/10 crash, Femex was 100% operational. There were no freezes. Many other exchanges, won't say names, had frequent delays. The stop orders got hung, so people got liquidated even though they had stop losses, which is why you had cascading liquidations. That didn't happen on Femex. To the best of my knowledge, stop losses were triggered. The exchange was fully operational. The website was working phenomenally during the entire crash, which would give you confidence that should that ever happen again, your stop losses would actually get triggered and you would be able to short the market. You would be able to put in entries and longs and buys on Femex in case this ever happened again. Liquidation processes, they were smooth and they were fairly indexed. There were cascading amplified losses and over $7 billion in errors on other exchanges, not on Femex. They're very low user complaints on Femex. There was a wick, but again, if you're trading with a stop loss, that wick doesn't matter because the exchange remained fully operational, and there was a wick on every single exchange. It wasn't just Femex, that was on everything, right? If you have a stop loss, the wick doesn't matter because the stop loss is triggered, and as far as is reported, there were no freezes and the stop loss is triggered fine. There were a lot of user complaints, unfair pricing, execution failure, so people's stop losses were not getting triggered. I cannot stress enough how important it is that your stop losses get triggered, because if your stop losses don't get triggered and you're in a leveraged long, you're going to get liquidated. And instead of losing 5% because you've got proper risk management, you lose 100% because your exchange screwed you over. Femex, that didn't happen. Operated smoothly. If you did your job, they did their job. That's what you're looking for in an exchange. I can't make it any more obvious than that you should use Femex. And so just one last thing here. Femex was stable and responsive. A lot of the other exchanges were overwhelmed, and they sparked regulatory scrutiny. Literally, my entire question here was, how did Femex perform during the 10-10 crash on Bitcoin? I didn't tell Grok that they're a sponsor of the channel. I didn't give them any information. I just said, how did they perform compared to other exchanges? That's what Grok said. It's the artificial intelligence. You can listen to it. Here's why you should sign up for Femex. It is a trustworthy exchange where you're not going to get liquidated because the exchange screwed you over hunting your longs. Because that's the bottom line. There are a lot of exchanges that want to have downtime when there's a liquidation event because you can get liquidated and they make more fees. Femex didn't do that. Femex stayed up. Your long stop losses got triggered, and it was a safe place for your assets to be during the crash. And if there's ever another crash, you can trust Femex to be exactly the same thing. So when you sign up for Femex and start trading, you're going to get access to all kinds of bonuses. As an elite trader, over here, you have $5 million in trading volume, you can get an iPhone 16 Pro Max. Or if you're in second place, you can get $2,000 of USDT bonus. If you're in third place, you can get a $1,300 USDT bonus. And if you're in 4th to 10th place in this kind of top 10 leaderboard right now, because there's a competition going on over here, you can share a $4,500 USDT prize pool. And also, there's a lot of other things over here. So trade during the event and qualify for tiered rewards. If you have trading volume over $3 million, you can qualify for up to $400 of USDT, and et cetera, down the list. If you have $100,000, you can get $80. So you can get a lot of really cool trading incentives by signing up for Femex under our link right now for the next 18 days. So sign up right now, get access to some really cool rewards, and most importantly, get set up on an exchange that you can trust is going to have your back if the market crashes. So let's finish synthesizing what I expect is going to happen on Bitcoin and what we should do. I expect that 2026 is going to be a remarkable year for Bitcoin after about March. After about March, everybody's finally going to agree that the 4-year halving cycle is dead, which we've been telling you for a long time. The market still doesn't believe that, but it's going to happen. By that point in time, I think the 4-year halving cycle is going to be dead. Everybody's going to realize it. And when they realize, oh, 4-year halving cycle is dead, which means there's no bear market in sight, they're going to buy the hell out of Bitcoin. And it's going to skyrocket the price of Bitcoin with low interest rates, quantitative easing. Stock market's going to be blasting off. You'll see DJI pushing towards 100,000 in the next few years. And then Bitcoin is going to do the exact same thing. That's what I see is going to happen. And so in 2026, you're going to see Bitcoin going to 130, 140, 150, probably over $200 to $250,000 by the end of next year, because I think the 4-year halving cycle is completely and totally dead. We have way too many reasons to believe that there's a lot of bullishness on Bitcoin than just the 4-year halving cycle says that we're supposed to go into a bear market, so we go into a bear market. The 4-year halving cycle bear market theorem is going to suppress the price of Bitcoin from now until about February, when you would typically be seeing the beginning of the bear market starting, because everybody's going to think, oh man, Bitcoin can't go up right now. It's supposed to be the beginning of the bear market. And then they're not going to buy any. They're going to be holding on to that cash. The money's not gone. It's just in dry powder because they were ready to buy in the bear market. And when they realize that the bear market didn't come and they're not going to get their 60% discount on Bitcoin, they're going to say, well, crap, now I got to buy at 140. And you'll see more buying at 140 than you're seeing here. Because the same people that were prepared to buy during a bear market, such as myself, I'm sitting on cash in case we go into a bear market. Sure, why not? I mean, it could happen. I instead will say, all right. And a lot of people will say, all right, no bear market. Cool. We're going to double our dollar cost average for the next 6 months. The inflows into Bitcoin in 2026 are going to be incredible because when the 4-year halving cycle breaks, it's going to probably lead to over $1 trillion of inflows just from that account. Not even to mention the rotation that's going to come out of gold very soon. So that's my opinion. That's my analysis and synthesis of the Bitcoin market and what I'm doing. I am prepared for a bear market. You've got to understand, my business relies on Bitcoin. This is my full-time job, has been for almost a decade. If we go into a bear market, my revenue tanks 70%. I got to prepare for that. I have cash savings for that. Cash savings that I would deploy into buys at the bottom of said bear market. But if it doesn't happen, I've just got a bunch of cash I'm going to dump in at a higher price. I don't care. If the bear market's not coming, great. And that's what a lot of people are doing. So I firmly believe you're going to see an explosive Q2 or so of next year, probably Q1, and you're going to see a massive rally. So for me, my opinion is keep investing, keep buying, and keep learning about Bitcoin and cryptocurrency. And most importantly, just stack sats. Get as many sats as you can. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, sign up for Femex, links in the description box down below. You will not regret it. I firmly believe that you will not regret it. From what I can tell, everybody who was using Femex before the 1010 crash did not regret the fact that they had funds on Femex. They regretted the fact that they had funds on a lot of other exchanges. For the sake of professionalism, I'm not going to name them, but none of the exchanges that we work with. They regretted having funds on a lot of other exchanges. I regretted having funds on a certain other exchange that you would definitely know the name of. Again, not one that we're affiliated with here on the channel. But from what I can tell, Femex executed perfectly. So make sure to sign up for Femex, because if you can trust them in the downtime, then how much more can you trust them when everything's going fine? I hope you enjoyed today's video. If you did, make sure to hit that like button, subscribe to the channel. And before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.